The oil market showed no reaction to the meeting of the U.S. Federal Reserve. Unlike almost all instruments that posted steep gains, oil prices lost value. However, it's worth noting that the asset began to slide even before the outcome of the meeting became clear and Jerome Powell held a press conference. Oil prices were wound down by data on the U.S. crude oil reserves. Stockpiles unexpectedly increased by 4.1 million barrels, while economists predicted a rise of 400,000 barrels. Nevertheless, it's obvious that the effect of a surge in oil inventories is clearly short-lived, and investors will soon shift their focus to the monetary policy of major central banks. In fact, this factor has already had a certain impact. When the Fed announced its decision on interest rates, oil prices halted their slide and even bounced back slightly. Now the situation depends on the European Central Bank. If the European regulator announces further 50 basis point interest rate hikes at each of the upcoming meetings, the dollar will keep losing value, and in this case, oil prices will gradually recover. Alternatively, if Christine Lagarde hints at a slowdown in the pace of future rate increases or possible rate cuts this year, the foreign exchange market will see a trend change. In this light, a stronger dollar will lead to a continued decline in oil prices. In the meantime, Brent crude oil futures extended losses after fixing below the level of 84. As a result, the benchmark hit a new one-week low, and the volume of short positions is expected to increase if the price settles below 82.20. In this case, the asset will most likely hit towards the 80 mark. The yellow metal rose above $1,950 per troy ounce, driven by the Fed's meeting, and gold futures completed their corrective move by hitting a fresh local high. If the price consolidates above the $1,950 mark, the metal will have every chance of approaching the psychological level of $2,000. Now the fate of the gold market depends on the European Central Bank. If the central bank keeps lifting interest rates at the same pace, thus removing the difference between rates in the euro area and the United States, gold may gain strong upside momentum and settle above $2,000 per troy ounce in the short term. If the regulator signals a possible slowdown in the pace of interest rates followed by the reductions, the yellow metal will quickly return to the level of $1,900 per troy ounce. In the medium term, gold is clearly under pressure after all major central banks continue to tighten monetary policy, and this will first limit the metal's upside potential and then contribute to its further losses. Speaking of the ruble, it held steady around 70 rubles per dollar despite the Fed's meeting. Such stability can be attributed to several factors. On the one hand, the market's reaction to the news contributed to a rise in the ruble as well. On the other hand, a drop in oil prices caused by a sharp increase in the U.S. crude oil inventories resulted in a weaker ruble, so the ruble remained in a relative equilibrium. From a technical point of view, an uptrend remains intact. However, the market may well turn around if the price returns below the $69 mark on the daily chart. In order for the volume of long dollar positions to increase, the price needs to stay firm above the level of 70. In this case, the dollar-ruble pair is expected to hit a new local high. But again, the market situation, as in the case of other currencies, depends on the outcome of the ECB meeting. Thus, if Christine Lagarde even hints at an early start of a monetary policy easing, the greenback will post strong gains. In this case, the dollar may surge to 71 rubles, thus dragging the Russian currency down. If the ECB announces that it will continue raising interest rates at a sustained pace at the future meetings, the US currency will dive to 69 rubles. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.